Hey everybody, Brian here. It is Monday, the 31st of October 2016, and it's time to start our webinar. We've got it recording, so let's go ahead and just get the housekeeping out of the way. As always, what we're going to do is start out with the stocks that we've previously mentioned and a couple new names for trading for Tuesday. And then we're going to go to the questions that you guys have sent in via email, and there's a good amount of questions there today, I'm happy to see. So let's take a look at these stocks, and then we'll get your live questions as well. And now it's time to get started. So let's see. Applied Materials we had on our list today as a potential short sale candidate, and the idea was for us to short it below Friday's low. Obviously that never occurred. The stock went up through the 5-day moving average and no longer looks like it's capable of being a low-risk short idea. So that is off the list. And Cree, as mentioned in the midday video, what we were looking for this setup over the weekend was for it to rally up above 22.40 and then to short it below 22.16. In the midday video, I said we wanted to short it below $22.20 a share. That was that little low, $22.20 a share. So it should not have been shorted because it didn't get down below that level, which was the key that we were looking for. So I still think that this setup looks good for tomorrow. And what we want to do is look to still short this one below $22.20 a share. Our stop is going to go just above that declining 5-day moving average at $22.70 a share. And from there, we will look to, of course, cover a partial position, typically a third, if it gets down towards that daily S2 level. And then we are going to lower our stop. If you personally think that, that stop is too wide, perhaps you want to put it just above today's high by a few pennies. But for now, our official stop for the swing trade will be $22.70 a share. MDXG, we were looking to purchase this one above Friday's high. It did do that. So if in fact you are long at $8.92, if you chose to take this trade, I think that the stop would stay below today's low. So $8.65 a share would be the place to put the stop on MDXG. And tomorrow, if it can get back, I'd say probably above this little peak right here, above $9.41, then whatever is achieved sooner, either daily R2, which is more likely, but if it breaks out beyond 941, we definitely want to take some off. Don't forget last week the CTRP trade that we had very astutely taken off part of our position as it broke out. We got involved before the breakout. We got involved over here, and we took partial off above that breakout level because it was getting extended, got stopped out of the balance there, and obviously that was the right way to trade this stock. Now, again, looking at the survey I did recently, everyone wants to be in swing trades, and a lot of people say I'd like to see stocks held longer. It's not up to us to decide how long a stock should be held. So for instance, with CTRP, if you were still holding it from last week, now you've got a, what I think is a pretty bad loser on your hands, down close to 8%. So it's up to the market to decide how long to hold. Think about the people who bought that breakout over there, and they're now panicking and probably spitting their stock out. Now this stock has the possibility of coming back down to reestablish itself, but it's clearly not something we want to buy or be long, not while it's breaking down there. So MDXG, again, look to take a third off, either above daily R2 or $9.40 a share. Shares of PANW today, we did get long, and our purchase price in there was $152.90. It did get up to daily R2 today and went beyond that. So that's where we wanted to take a third of our position off. So right now we have 2/3 of our position still long, and we've taken $2 off on a third of that position. So we've got a little bit of cushion, and that allows us to hold a little bit easier on the balance. So what I'd like to do now is to lower our stop to 152.95. That's just below, obviously, the round number, near that 2-day volume weighted average price. And if we get stopped out there, it would be for a gain of a nickel. We wouldn't lose a penny on any shares here. And I think that, that's what we want to be looking at, especially in this market environment where this market is just going back and forth. And we've got so many mixed messages from that weekly time frame that, this prior important high is now trying to hold as support. But we're also below the volume weighted average price from Brexit. We're below a declining 50-day moving average, and looking at a 15-minute time frame, we're of course below the declining 5-day moving average, and the support from last week that broke on Friday has acted as resistance today. So it's very important in this type of environment that we have the strategies and take advantage of taking partial positions off when we have the opportunity to do so, and then lowering our overall risk so that we're not in the position that a lot of people who don't have the market flexibility are in, and end up letting a winning stock turn into a loser. Just is not acceptable. Now, for our watch list ideas that we had today, these were of course the unofficial stocks. We have our official swing trades, and then we have these ones, which so for instance, shares of Fitbit today, this was a short candidate below last week's low. If you decided to take advantage of this trade, then it came down to daily S2. You should have covered at least a third of it. And if you're still involved in this stock, as I said, midday, I think your stop probably ought to go about 1340. It was just a watch list idea because I don't see huge downside opportunity on this. So unless there's questions about Fitbit, I'm no longer going to continue to watch that one. And the same is true for Tesoro. Now, Tesoro was a watch list idea, and this one actually kind of played out perfectly. Over the weekend, I had drawn in the fact that, here's the level it needed to break. But what we didn't want to do was to buy it on a breakout right there, because it had just run from 82 and will have had to have traveled $2.50. Instead, I had drawn this line in showing that we were looking for a pullback and then to buy on strength. So if you bought this one today, you either bought it above the peak that it made this morning, or as it got back up above this volume weighted average price right in here at about $84.30 a share. I would personally say if you're looking at just a swing on this, then your worst case stop goes below today's low. And as we mentioned over the weekend, that again, Alphatrends isn't made as, isn't designed to be an investing website, but when I see a stock that has a good looking longer term chart like this one does, where we had seen it go from accumulation with all these moving averages crossing back and forth into a stage 2 uptrend on the weekly chart showing higher highs and then higher lows above all these rising moving averages until those moving averages crisscrossed and then rebroke support. It was then in a downtrend, lower highs and lower lows, and now it appears it's readying for another bigger move to the upside. This is the type of stock that has potential for investment. Now, investment shouldn't be just, okay, it looks like a good chart, so I'm going to buy it and just hold. Instead, as with any money that you put in the market, you need to have a plan for what if. What if you bought it and it's starting to move higher? Now, if you're an investor, where does your stop go? Well, as I often do with the swing trade candidates, I like to give a couple of different stop opportunities. So an absolute worst case stop, in my opinion, for an investor is down underneath this low right here. So at about $76, $77, let's call it. To me, though, that's $7 of risk. That's a lot of risk. A secondary stop might be right underneath that higher low, and that's where we saw the higher low above the rising 50-day moving average, and today we see the higher high. You might also, this would be me personally, would go right under here. But again, make the trade your own. It has to be something you're comfortable with in your time frame. I'm not here to say, here's the only way to do it and you must put your stop there. Maybe even stagger it. So a third of your stop, if you're an investor, is below here, a third of it there, and then let's say it goes down and stops you out of 2/3, and then it rallies up towards $150 a share. Well, at least you've still got a partial position. So I'm here to be the coach and guide you and show you the reasons and the logic behind the trades. not looking at all at the fundamentals. I have no idea about the fundamentals of Tesoro, but it's in the markup stage on the stage 2 time in a weekly time frame. Therefore, it looks like a good candidate for continuation. Now, for a swing trade, I don't love the idea, but I would say, stop under today's low at the worst case. This is one I will probably not continue to follow because, again, I don't think it was the perfect setup, for a swing trade, and therefore it was the watch list idea. If you have questions on it, again, feel free to ask me about the stock if you have questions from whatever time frame you're trading. But that's why it's just a watch list idea. Another watch list idea for today was this XON, and this is Interexon. And on the weekly time frame, it's still in this longer-term downtrend. I say that because we have a declining 200-day moving average. If they don't scare you out, they will wear you out. But the consolidations tend to resolve in the direction of the primary trend, which of course is still lower. Now, this was a watch list idea because I didn't see huge downside opportunity, but what we were looking to do was to short it below this level over here, and it didn't do that. And I think the stock, just looking at it, as I would say, look at the personality of the stock. The personality of the stock is rally, pull back, and these are, it's a choppy stock. To me, when I look at this, I see a stock where it's very difficult to control the risk. So the personality of the stock, for me, is not suitable, and I think you have to have a stop that's probably too wide, somewhere up in here. But if if it's okay for your personality, or you look at it, have a plan, know what makes sense to you. But again, it didn't trigger today, even if we were looking at this watch list idea. So I'm going to say remove that one from the watch list. And now for new ideas for trading on Tuesday, this stock, TMUS, is T-Mobile. Looking at a monthly chart, you can see it's been in this longer-term uptrend, and obviously on the weekly time frame, we see it had a nice consolidation here for the course of about 3 months, and then drilling down to a daily time frame, there's that consolidation. And what we saw was last week the stock gapped up and ran pretty hard. People chased it, and there's no reason to chase. We wait for the pullback, and so far it appears as this prior area of resistance is the stock's holding above it. We've got a rising 10, 20, and 50-day moving average, and of course all the weekly moving averages are heading higher as well. The path of least resistance for this stock is clearly higher. When we take a look at the volume weighted average price since the event, that is of course since the earnings report or whatever it was that got people excited enough to chase this stock higher, it's just overhead. So I think that today's high was $50 and a penny. I think if you get it back above that high, then we're taking out this little short-term band of resistance, and that's where the buyers regain control of this stock. So we want to buy it above the high from today, so at $50 and a penny. I'm sorry, above, so we would buy it if it trades at 50.02, and our stop, I'm not going to say is below the low of the day, because the low today, let's take a look together here. Today's low price was $49.32. I'm not going to put it there. Instead, I'm going to put it just below this Friday afternoon low of $49.37. So our stop then, in other words, is going to be $49.28 a share. That low was $49.30 was the low on Friday afternoon, that is. So, today we were 2 pennies above it. I think that there's likely to be a stop or two under here. This gives us just a little bit more safety on it. And of course, if the stock makes it up towards daily R2, which I would imagine would be, somewhere around 50.75, I haven't plugged it in, but probably up around that area, I would say take a third off. And then at that point, what we would most likely do would be to raise our stop underneath this low here. Now this one might be a day early, and I say that because the 5-day moving average is declining, and we're getting rid of this data in that 5-day moving average calculation tomorrow. So that 5-day moving average will continue to decline unless the stock really gets up and going. So just be aware of that. the 5-day moving average will likely still be declining, and it's possibly a day early, but it does look like a good candidate for further upside. There's 21 million shares that have been sold short and not covered. It can't feel very good for any of those short sellers with the stock at all-time highs, and the short interest ratio down here means it would take 7 days of average daily volume for them to cover that position. So I think it makes a good risk reward. And next, so that's the only official idea I have for tomorrow. The other ideas, I just don't think they're properly set up. And just going through the large universe of stocks that I go through, over the weekend, I noticed there's a lot of damage done to some stocks that that is going to take some time to heal, or they're going to continue lower. So we just need time for the setups to present them in a low risk way. And right now, American Express, we looked at this one last week, and it's holding on to the bulk of these gains still, obviously. And we have this 5-day moving average right here kind of flattening out. I'd like to say it would be a good swing trade idea above this high right here, but the problem with that is that it's going to have to run too much to get there. So, as I often draw in, I'd like to see it get up towards that level, maybe even up towards 67.30, and then pull back, see this 5-day moving average flatten out and start to turn higher. And then as it starts to rally, we would either want to purchase it here if it's above the VWAP or above that high. Most likely it would be right here. But for now, it's worth keeping an eye on for tomorrow, because look at the weekly time frame, it's got a lot of room here. And here's another stock that has the potential to become a good investment. Whether it is a good investment or not, we'll know down the road. But right now, it looks like it has the potential to become one. And regardless of what your time frame is, I'd say keep a close eye on AXP, but be sure not to chase the stock. The chasers, as we've been saying, have been getting what they deserve for chasing. It doesn't pay to be undisciplined. Now, if we had a super strong market and the markets were, just ramping higher, then you can get away with sloppy entries, because they will often just be dragged higher, on a long with the market continuing higher. But when we have such an uncertain market, with all these different time frames telling us different messages, that we have to be extra cautious and disciplined. This is where the good traders know not to chase and not to make the mistakes that put them in a position that when the market gets so-called easy again, they're dealing with an account that's close to their account all-time highs, rather than the people who chase and get chopped up in this environment. This is where your outperformance comes, is in a choppy market. As a trader, this is where your outperformance comes. CYBR is another one that's set up to the long side, I think, but I'm not thrilled with it. It's at the 200-day moving average. If we take a look at the volume-weighted average price from this low, you can from the low this year, you can see it's right at that volume-weighted average price as well. Looking to a shorter-term time frame, we've still got a declining 50-day moving average, so that doesn't thrill me. Okay, in fact, as you guys know, I don't suggest you swing trade a stock on the long side with a declining 50-day moving average. So it's a watch list idea primarily for shorter-term traders. I don't believe that you should take this one as a swing trade. Now, here, looking at a 15-minute time frame, let's just get rid of that. On the 15-minute time frame, you can see, 2 days ago rather, it had a nice pop in here, and we're holding on to those gains. Tomorrow, we get rid of the data from this day in the calculation of the 5-day moving average. So midday, or after about the first hour or so, this 5-day moving average will begin to flatten out. And then if the stock breaks above this level here, it'll drag that 5-day moving average higher. So I think that this is probably, at least an hour into the day. or so. But if it triggers early on, and if you want to take it, or looking at a 5-minute chart rather, if it triggers above that level, perhaps you put a pretty tight stop just underneath here. But again, really not a good swing trade candidate, but it looks like there's something that could maybe make a move tomorrow intraday, and I'd keep an eye on it. Now, we already talked about Tesoro. Valero is another oil refiner. This one still has a longer-term 200-day moving average, which is declining, which tells me it's more likely on the weekly chart to have some kind of pullback into this area at some point. But when we look at the daily time frame and you see how well it's holding on to these gains right now, and you can see that the volume was increasing on the way up, and now as it's consolidating through time, really not much of a price correction, but correcting instead through time, it's the volume is diminishing, saying there's not a rush to get out of this stock. It broke beyond this resistance, and it's holding on to those gains. When we look at a 15-minute time frame, you can see where we broke higher, right? Was at this point, and now if it can get back up above this little band of resistance somewhere in here, I'm not sure exactly where, but I think this one might be a good candidate for upside continuation. So definitely keep an eye on that one for tomorrow, as again a watch list idea. So what we want to do what we're going to do right now, as always, is to take a look at the questions that you've sent in to 1bshannon@gmail.com, and the purpose of that email is to answer educational concept questions that you might think of between webinars, and then to also answer the stock ideas for people who are unable to attend but are going to view the video after it's uploaded tonight. So first question is from Jerry, and that is, Brian, in the end of the week video, you mentioned there were great intraday trades during the past week. Can you show us some of those? Well, in some of the stocks that we traded, for instance, we were involved in a watch list idea, WDC, and buying in here. This is what I mean by intraday opportunities, where they have this great trending environment. And we were also short AMSG, which was declining rapidly that same day. But when you look at the market, okay, the market has been choppy. So I don't know if you're referring to the market. I don't remember exactly what I was referencing for that. But in the S&P 500, I'm personally staying away from trying to get involved intraday because we have too many conflicting messages here. This has the potential to be the bigger support level. We still have a rising 20, 30, and 40-week moving average. So it tells me I don't want to be aggressively short, especially when this prior resistance still is somewhat acting as support. But the intraday time frame, I think the opportunities intraday, if you take a look at each day, and let's just say, the day that it gapped lower right here. So here's the volume weighted average price for that session. As it breaks to a new high for the day, it makes a higher high above that VWAP with a stop under here. For a day trade, there was a good opportunity for the long side. And in the afternoon, it broke down, and here's where it broke the support. And if I recall correctly, it had just been breaking down S1 right there, and I said, looks like it's headed towards S2, which it came down and hit. On Friday of last week, we kind of had the same thing. We had a little bull market, and let's do this. Let's put a volume weighted average price on there. We had a bull market in the morning. The market went sideways and broke down into a bear market in the afternoon. So there are opportunities out there intraday, but I need to stress a couple of things. One, day trading is fortunately, most people aren't actually at Alphatrends for day trading. I try to make it clear that our intent is to be swing trade ideas. Sometimes though, a lot of times the market tells us that what we think is a good swing trade setup, we get stopped out of that day, so it turns into a day trade. But we listen to the message of the market and let the market tell us how long. And if, in some of these watch list ideas, if you're day trading, Tesoro, you could have day traded Tesoro here as it made that higher high above the flat to rising volume weighted average price. So you would, for instance, buy right here with a stop either below this higher low or below the low of the day at that point. That comes down to a personal preference. Myself, now one, I don't trade commodity related issues, but if I bought it here, my personal stop would have been right here. And it's not about what I do with my money, because I say to you guys all the time that I don't trade energy names, but if I see it, and I don't trade bank names, but if I see the setup, I'll present them to you. It's about doing what's right for you and your money and your risk tolerance. That's where the value of it really comes in. But as far as day trading goes, some of the ideas, like I said, for CYBR, this is the type of stock that might present a good intraday opportunity, but I wouldn't want to be holding it overnight, not with a declining 10, 20, and 50-day moving average. So hopefully that answers that question for you, Jerry. Feel free to follow up with another question if it's not clear. Another question here is from Mark that says, Brian, could you explain short interest and days to cover and why the amount of days is significant? Well, one, I'm going to send you to an article I wrote about this a while back. So I've just put that into the chat area, so you should be able to see that. It's an older article, but that doesn't matter. The concepts are still the same. Let's go back to, I think it was TMUS. So TMUS that we're looking at for tomorrow, as I mentioned, you look at the short interest here, and that's what this, this allows you to do on TC2000, is to add short interest. And on this weekly chart, you can see it's been a pretty heavily shorted stock, but it's at all-time highs, and there's 21 million shares that have been sold short. Now, the thing is, we don't know if those short sellers are hedged in some way, but the short interest, somebody sells it because they think it's going to go lower, so they sell it today with the intent of buying back at a lower price. So if you sold it short, let's say at 44, one, you shouldn't have because it's an uptrend, but let's just say you did. And then, maybe your stop was up here. You get stopped out of it. The fear of a short seller is that if you sold it short at 44, then you're out, if the stock goes to, let's just say a round number. If you sold it short at 40, it goes up to 44, you're out 10%. Well, if it goes up to 88, you're out 100%. If it goes up to 100, well, then you're out another, you're 130%, loser. So you can lose more. The theoretical amount of money that you can lose is unlimited. There's nothing to say that this stock can't go to 100 or 200 or 500 or whatever. Now, it doesn't seem likely, of course, but the fact is, when the stock is in an uptrend, then at some point, these people who are short are going to be motivated to either, one, they're going to be stubborn and go broke, or they're going to be motivated at some point to cover that position. So the amount of time it takes to cover is known as the short interest ratio. Also, and that's on this daily chart, here's the 21 million shares you can see right here where I'm pointing with the arrow, and just below it, the latest short interest ratio. So the short interest ratio is 7.34, and the way that that's calculated is you take the average daily volume and then divide the amount of shares that are short into that. So at 21 million shares short, the average daily volume would be most likely about 3 million shares. I know that because if we take 3 and multiply it by 7, we get 21. So what it means is, based on the average volume of 3 million shares, and we can go take a look at that together here. So you can see on this, on the below here, and in that tool, you can see that the 20-day moving average of volume is 4.6 million. So I think they're using a 50-day average. You can see how it got skewed heavily right here on this big volume day. But the point is, at the time that the short interest came out, which is every 2 weeks, it would have taken 7 days of pure buying from those short sellers to cover their position, to cover their bearish bets, and to get out of the stock. So when that number is, let's say, 0.5, well, then it's going to, if the short, so in other words, if the average volume is 3 million shares and there's 1.5 million shares that have been sold short, it would take them half a day of average volume to cover that stock, to cover their bearish bet. So that wouldn't really be significant. So a half a day you can get that done in the day. But if it's 7 times and you go to cover that position, you're going to have a large impact on the price. So the higher the short interest ratio means it's more difficult to cover that position, and most likely it's going to drive the share price higher as those shorts scramble to cover that bearish bet. And again, I had written also about that in the in my book as well. There's a pretty good chapter about that. Trent has a question here, which is two-part question. One, do you have a recommendation of a trade journal for analyzing your trade? And two, or do you think it's necessary with your trading style? Trent, for me personally, I haven't done a trade journal in a while. It's just something that truthfully, I've just kind of been lazy about it a little bit, but I do think that people should do it, keep one. And for me, what I think is most effective if you really want to learn is that you print the chart out and you analyze it and, do a post-mortem of the trade. So for instance, if you were, if this stock was to, if the shares of TMUS were to go like this, and then like this, and then fall apart, well, you would want to, print the chart out and then write notes on the chart, whether you write them by hand or, with an editing program. That way you look at, you print out the daily chart and you say, here's what the setup was. Then you go to the intraday chart and say, okay, I bought it at this point because it made a higher high above that 5-day moving average. It rallied up to daily R2. I got a third of my position off, and I raised my stop to here and got out of the balance break even. That would be a successful trade in my mind. The unsuccessful type of trade would be if you're still holding it down here, and you would say lessons learned. One, take partial off to reduce the risk. Know the market environment. Make notes that make sense. It's not just about I made money on this one or I lost money on that one. It's about what was the environment, how did you handle it, would you do the same trade again, would you buy that stock once again, if was the setup valid, or were you trying to force a trade? What was it that you can learn about that trade after the fact? That's where you really get the value of a journal. So, for instance, if you look at the CTRP trade, last week, I did a post-mortem of this because I thought it was a great educational piece, because what we had done was said we want to take partial off after getting involved long over here, wherever it was, that we wanted to take partial off as it broke to new highs, because we had to ask ourselves, where has it come from? So as I always say, if we were looking to buy that breakout, we wouldn't have bought the breakout. Let's say the setup before that was more like this, and kind of did this for a day, day and a half. And then it broke out right there. Well, then maybe we look for it to do something like this, and then to purchase either at that point or above this level and say, okay, I'm purchasing here, or maybe purchasing half a position and adding over here, but with a stop. Where would your stop go? So those are the things, that's the way that you want to analyze it, and keep your trade journal. So if you go back to that blog post about, I think I called it buy the breakout ? That will provide the the value of that. Arlen's got a question here, and that is, what's the best stop for LMT swing trade? Well, I would say, looking at this one, it's got a declining 50-day moving average, so I don't think it's a good swing trade idea. Let's look, however, intraday. We'll look at a 15-minute time frame, and the volume weighted average price from the event, it's below that. So if you were in this as a swing trade, let's say from last week, I think your stop should have been under here, because that was a little bit of support Friday morning and then Friday afternoon. And more importantly, this is the volume weighted average price since that event caused it to rally. So I would say your best stop on a swing would have been right there. So without further information that you're giving me, if you're in the chat room, go ahead and type it in. But without further information about where you bought this or if it's something you're looking at buying, that's the best feedback I can give you on that. The second question in this email is about NWBO. Now, Northwest Biotherapeutics is obviously a biotech company. It trades 1.6 million shares a day. And the question is, Nubo had an unusually large volume back in September. And he's talking about this. Is this a good sign for a trade? It also seems to keep the support around 41 cents. One, know the personality of the stock. The personality of the stock is it's in a downtrend. It's in its bear market. It's got declining 20, 30, and 40-week moving average. One day or a couple days of volume doesn't mean much of anything, especially in a stock like this one, and know the personality of the stock that you're trading. This is one of those little biotech stocks that has these big run-ups that people get excited about, and then they completely fall apart. And you can see on this monthly chart, that little blip is completely insignificant. So one, it's a risky biotech stock, and these little risky biotech stocks are the worst, especially when you have, the biotechs in their own little bear market as well. Even the big established biotech companies are in a bear market right now. So when you buy really what I consider a little piece of garbage like Nubo, it is, if you were buying it months ago, here we see, it broke some resistance and started making higher highs and higher lows, and then it completely fell apart. And what's more important than the volume from that one day or a couple days in that area is, let's look at that volume with a more important tool. So this is where the move began on that big volume. So we're going to put the volume weighted average price on there. And where the average price since that day in September that you're talking about, the average price that people have paid for this stock is up here at 54 cents a share, 20% higher or 25% higher than where the stock is currently trading. So the average person is down 20% in this stock, meaning it's a loser. There's no reason to be looking at this as potential long candidate. It's a piece of garbage, little biotech stock. I hope you're not in it, and that certainly does not look like it will hold. The average participant is losing money. Shivneet has a question here, which is, how relevant is a 20-day moving average? And he's going on to say, for instance, in PANW, which we had today, the 20-day moving average is sloping down, yet we took the long trade as you expected. Stock went past it. Do you factor in the 20-day moving average here at all? I do factor it in, and I see that it's been trapped under that previously, but more importantly, we had the 10-day crossing up, and we have a rising 50-day moving average. You generally want to trade in the direction of the 50-day moving average. We also have the stock is above the 100, the 150, and the 200-day moving average, and that 200-day moving average is actually starting to flatten out. So when we look at it and we say from a risk-reward standpoint, we want to be aware that that 20-day moving average might slow the stock down, but from where we purchased the stock, it didn't have an effect. And as I mentioned, that was probably part of the reason why I said in the video where I was outlining a scenario for how to trade this stock, I did say that you should trade a smaller share size than normal. And I think it might have been, I think I said it because of the overall market, and maybe that 20-day moving average, being in a downward slope, had part influence on that as well without my realizing. But I do look at the 20-day moving average, but I consider realistically, as I say, on the daily time frame, we want to trade in the direction of the 50-day moving average. And on the intraday, we want to trade in the direction of the 5-day moving average. And on the very short term, we want to trade in the direction of the volume weighted average price. So this morning in chat, I said, if you missed the first opportunity to get involved long, then getting back above VWAP was probably the place to get involved, or I think I drew this in there at that point. Either way, you know, hopefully that answers that question. It's not a deal breaker, basically. Not if you have the more powerful longer term 50-day moving average heading higher and the more important intermediate term 5-day moving average heading higher. So they're all little factors that weigh on the decision, but it's not enough to say let's not take the trade. There, you know, the perfect setup simply comes around maybe once a month, and those perfect setups, you know, 1 in 3 actually works. So it's not about the perfect setup, but about the environment you're in and position sizing as well. Couple other questions here. I've recently taken the subscription and hold immense respect for your consistent discipline. Thank you. I had a few questions for the webinar. Placing stops. How to place stocks considering multiple time frames. I always fear my stop will be taken out and the trend will reverse. Well, before I continue with this question, absolutely, I agree that, you know, that's trading. Sometimes it happens. You get stopped out and then the stock turns back around in the other direction, and you know, you're left. So you either got to get back involved, which is very difficult for a lot of people, or examine where that stop was and you know, look for it and say, you know, maybe I need to adjust my strategy. But just so let me continue with the question actually. How to calculate place stopped at the point where it's proved with reasonable accuracy that the direction of the rally is in the opposite direction of the trade. I'm not sure I quite understand that, but I think I can still answer your question. Based on your experience, kindly answer across multiple time frames for a day trade, intraday, and longer term investment. Well, you know, for a day trade, very simple. If it breaks below the rising volume weighted average price and that volume weighted average price flattens out, I think a day trade, you know, if you're long here, you get out there. If you get long here, then underneath that higher low, most recent relevant higher low, which based on preference would be, you know, personal preference would be this higher low, or maybe that low of the day if you wanted to give it a little bit more room. On a daily time frame, you know, if you're an investor and you're looking at this stock as, hey, I think it's got a chance to go back up towards that 200 level, and I purchased it on this daily time frame at this point, well then your stop would go maybe underneath this low or the most recent relevant higher low, which I believe is probably closer to over in here. So when we look at a 30-minute time frame, I would say that, you know, it's more likely just under here for an investor. So this would be, for me, maybe half of the investor would go under here and the other half underneath that low, because that would be proven, but proven that it's invalid. So the most recent relevant higher low for longs on whatever time frame it is you're trading, but also in the direction of the volume weighted average price if you're a day trader, the 5-day moving average if you're a swing trader, and the 50 and the 200-day moving average if you're an investor. Can you share some strategies for intraday trading? One I've been deliberating about. Once the stock approaches the VWAP on a 5-15-minute interval, take the trade in the direction of the 5, 10, 50 if the 5-minute candles tend to prove so. Well, again, I need to be super clear. Alphatrends is a swing trading service. That's why the hours of chat aren't all day. The chat is there mainly to help with the questions that you have that come up during the first half of the day, and then to provide some intraday trading ideas. But it's inappropriate for most people to day trade. I say that because most people I see day trade end up losing and losing badly because they do not control the risks, and I don't promote day trading. Sometimes in the chat room I'll mention an idea, but I never tell people, hey, buy this one for a day trade. Take a look at it. If you're a day trader, do what you feel is right for you. I'm here to help you with it, and I will help you monitor it. And I'll point out that maybe CYBR could be a good day trade stock, but it's all the same principles that we use for investing or swing trading, but on a shorter term time frame. And the problem with it is that you don't have as much time to plan your thoughts, to plan your strategy, to think it out in advance and say, and come up with the risk reward, the if-thens. The more decisions that you make in the market, the more likely it is you're going to make mistakes. And to me, I think most people need to just slow down and relax a little bit. The people who are, want to be these super active day traders, if you can be a good investor, then you should look to swing trading. If you can be very consistent, disciplined swing trader and take partials off, those are the same concepts that we look at. So there we go, and those are all the questions from the email. Now let's see, PD is asking, how about a look at MPC? So MPC, this is Marathon Petroleum. Marathon Petroleum, you can see that this longer-term 40-week moving average is flattening out. It's got a rising 10, 20, 30-week moving average, and it's broken some resistance over here, like a lot of oil, plays have. And again, I personally don't trade oil. It doesn't mean it's not a good place to make money if your personality is suitable for it. On the daily time frame, you can see we've got a rising 10, 20, and 50-day moving average, so that's good. Looking at these candles, they look pretty wide, meaning when I look to an intraday time frame, I think I'm going to be seeing a choppy stock, which is what we're seeing in here. Now, the good news is that, it broke down last week and then rallied. So one, this is clearly a choppy stock. Big run up, big pullback, big run up, big pullback. Big pullback, run up, pullback, runs back up. So to me, one, you're not mentioning any time frame. You're just saying MPC question. So with very little information of this question, I don't know what your time frame is. I would say, though, if you take a look at this volume weighted average price, it's good to see it's back above that. The volume weighted average price from this gap lower is good. To me, the stock's a mess. I wouldn't trade it. And he's saying, haha, I meant for a few months out. For a few months out, to me, that I think that this, this is pretty important. These little, you can see that it does these little shakeout lows. The only good news about those is that we had this shakeout low, we had a higher low, and then another higher low. So I think that your stop would be under here. And if you're comfortable with this type of volatile stock, then, probably above this high, you buy half a piece, add another half up there, and you have that wider stop on it. Bojan says, Brian, how does time of day impact your intraday or swing trading? What I mean is, are you willing to take more risks a certain time of the day? Maybe you don't even take some if it's, say, midday. Well, later in the day, I tend not to put new trades on, just because I know for me personally that that's not a good time for me to make money. And so that's part of the reason the official hours end midday for the chat room as well, because oftentimes in the last hour of the day or so, I begin my homework for the next day. I'm monitoring open positions and I have my stops in, but that's how I'm able to get the video out as quickly as I am, typically by 5 p.m. with ideas for the next day, because I've been doing the homework in the last hour simply to be more efficient, number one, but selfishly because it's also a time where I don't make money generally, so I tend not to commit new capital. I think the peak time for me to initiate a new trade is between, let's say, 9:45 and 10:30 Eastern. So I don't want to be involved typically right out at the open, but sometimes I do. It just depends on how it feels, and that's the art of trading versus the science of technical analysis. But once the market is settled down just a little bit, and I can start to see that the volume weighted average price for that session has a little bit of a trend developing, and I have maybe a logical place for a stop to go, then I will initiate those positions. And really, up till so the first hour of the day, or the second after the first 15 minutes, that first hour is when I'm typically most active. But again, that's what I find works best for me, and and for entering swing trades. But there's always opportunity. It's how deeply into the market are you looking, and are you able to stay focused on a larger number of stocks is about, again, more personal preferences. Last one, and Yelp, L-A-Y-E-L-P. Again, no mention of time frame, but I will say that Yelp broke down over here, and it's been in a horrific decline. There is now a declining 50-day moving average. It's below a declining 5-day moving average. It's a broken stock in a downtrend on the daily time frame, and it's in a downtrend below the declining 5-day moving average. It's too late to short this thing, and it makes no sense to buy this stock. So that makes no sense to me. And so I think he's clarifying, saying he's in longer term calls. You know, longer term calls, you still have to manage the call options based on what the stock price is doing. And when it breaks down, you got to get out. So I don't know if you're long from higher prices, but, you know, here, this is where the stock broke down. That's where that's where your final exit point should have been for any long position, whether it's through equity or through the through the options. And he's saying for those of us who are still holding C-Trip, and again, same exact thing. And that's why I made this case about this, that it makes no sense to hold a stock that's breaking down. It's broken. If you're holding call options that are out several months, you're most likely going to lose everything. It's a broken stock. I would not be holding these. When the stock breaks down, you've got to exit the option as well. I don't know how much more clear I can be about that. So hopefully, you know, that does answer your question. Two here from Frank. One is ADSK. Autodesk, ADSK. Weekly, it's in a nice longer-term uptrend. You know, broke this resistance, held as support, broke this resistance, held as support. It's got a rising 10, 20, 30, 40-week moving average. Short interest is 7 million shares and declining, so they're adding demand to the stock. Let's just look for kicks at the monthly time frame. So this is up near all-time highs. Looking now to a daily time frame, you know, again, we like to see this pattern of broken resistance holding a support, resistance holding a support. That's a good, healthy, trending stock. We've got this stock now with the 10-day back up above that 20-day with a rising 50-day moving average. We saw that, you know, we had this consolidation. It broke down, so you move to the sidelines because you don't know if it's going to bounce. It might have done something like this and continued lower, but instead, you know, it was a shakeout above a rising 50-day moving average, so that's good to see. Now it's starting to turn sideways again. So with a rising 10, 20, and 50-day moving average, we look at a 30-minute time frame, and let's just erase that. The one thing that strikes me in here is that you would need a wider stop because you do tend to have big choppy ranges in here, and a lot of these, you know, candles, especially on the open, look very treacherous. So you're going to have a wider stop in a you know, choppy trading stock like this, and be very careful near the opens because you tend to see a lot of crazy activity. It looks to me though like you get it back above this little band of resistance from today and last week, that the stock ought to be able to take out this high and continue to make higher highs and higher lows. So I like the way this ADSK is setting up. My concern is that, you know, I think a stop would have to go, you know, down here, which isn't too far away. I mean, $1 on a $72 stock, but that's where I would say, you know, you put it. And PD is just following up on Yelp and C-Trip saying, understood, they're both small positions, but thanks. And even, you know, don't get into the habit of, you know, don't allow yourself to justify holding a loser by just saying, well, it's a small position, I'll just wait, and I've got plenty of time. Broken is broken. And maybe you get lucky, but 1 in 10 are going to turn themselves around when you have a stock like Yelp or C-Trip when they're breaking down so hard like that in a market that's becoming more suspect by the day. So, Frank, going back to Frank's other question, which was FLO, says they look like they're setting up for the long side on the shorter term time frame. So Flow, this is Flower Foods. I'm glad you said they look like they're setting up on a short term, because I certainly like Autodesk better, because this one is really it's still in its own bear market. It's got a declining 20, 30, and 40-week moving average. The shorts have been piling on, and they're correct so far. Now, they're getting a little bit aggressive, I think, down here, adding this many shares after that big drop. And maybe they're, as you say, maybe it's good for a short-term trade. The 50-day moving average is flattened out, and you can see that we, in this range, we have this, so it's been range bound in here. Let's just look at that again. That's where the shorts have really been adding on too. So let's look at it with that short position. You can see that in that time, the average short, that the short position has gone from right down in here, 19 million shares to 34 million, let's just call it. So they've raised it by 15 million shares. At that time, where they added from, this gap lower, the volume weighted average price is right there with the 50-day moving average. So the average of the last 15 million shares short is basically at about 15 bucks a share, meaning they're likely to be in a position where they might become squeezed. So the lower band of support in this range, and here we're at the upper band of resistance. The good thing is that we are seeing now we have these lows, and then we have a higher low, and it's holding on to that 50-day moving average. So that tells me very clearly that the absolute worst case stop would be below this, this candle in particular. So let's look at that on a 30-minute time frame. Your worst case stop would be under here. That is absolutely crystal clear to me based on the daily chart. Now, where would it, the buyers regain control? And that's, that's where it gets a little tough, because we have, this 5-day moving average rising, and we have this high, but we have this high. So perhaps above last week's high, I think, because we've got this little resistance in there right now. The VWAP, since this breakdown, the buyers regain control and it's holding a support. So for a swing trade, I think a stop would go below today's low, and maybe you buy half a position above here or half a position above here. But for the short term, yes, it does look like it can continue to move higher. But longer term, it's still highly suspect. I like that these on the short for your short-term trade, I like that there's so many shares that are currently underwater from the short position. So it's worth some kind of trade, but I would say don't go heavy on it, because you've got that longer-term downtrend. What I'm going to do right now is turn this recording off while you guys can put some more questions in, and it'll be up on the website in probably about an hour or so if anyone missed it. So recording is